Hello, good evening everyone, and welcome to another stream by myself, Market Structure Break. I hope you've had a great weekend so far. Hope you've enjoyed a sunny Sunday over here in Germany. At least we did have a fabulous day. So let's get started. But before we jump into the charts, I just wanted to say thanks a lot, guys. We already are 45 people in our community. 50, sorry. We are already 54 people in our community, 54 subs. That is amazing. Thanks a lot for the support. So if you are live, comment. Let me know where are you from. Comment in the chat. And now, just like last time, let's hop in. As you can see, when will you buy? This is the question that I wanted to ask you overall in general for this stream, because as you'll see shortly in the charts, we are at a crucial moment, and the question is, are we going to see lower prices over the next couple of weeks, or are we continuing up? Will we push higher? Just like last time, I came across a great, I would say great quote again, and I would like to share it with you one more time. And just like last time again, it is again by James Clear, the author of Atomic Habits. You can see it here in front of you. It's hard to build momentum if you're dividing your attention. I just love quotes like that make me think, that are applicable in life and also in trading. But if I think about this quote with respect to trading, obviously what I believe we all should do is simplify and focus. What do I mean by that? I think you should not trade too many different assets. Just only pick 3 or 4 assets. Pick your favorite ones. Pick 1 or 2 markets, no more. Why? Because I think you should rather get to know the assets you trade really well and trade them more often than focusing on too many different assets at once. Rather, trade them more often, maybe with the help of separate accounts, looking at long-term, mid-term or short-term trades, but don't trade and try to focus on too many different assets. Also, I think the same applies for the setups you want to trade. How many different setups can you actually really trade well? I would say 1 or 2. At least this is the case for me. I really try to focus on 2 main setups, I would call it. My market structure break setup, and also, if you've watched videos of mine before, I like to trade deviations above or below a range at higher time frame levels. Let me maybe quickly show you what I mean. For that, let's hop onto the charts. Let's look here at TradingView. Look at a blank background, and then I can maybe illustrate a little bit what I mean. So for myself, for example, what do I mean by market structure? A simple market structure break setup is, if you assume that this is our current trend, basically we are in a downtrend, then for me, you need to break this latest lower high if you really want to talk of a potential trend shift. So let's assume we can do that. Then we are finally looking at a potential bullish environment again. And now you don't want to buy immediately, but you want to basically wait for the pullback into your, as I call it, target box. Let's see whether I drew well. Yes, there you go. Where would you find my target box? You would find it between the 618 and 786 Fibonacci level. In this case, I would call it a bullish target box, therefore label it in green. And this is where I then would want to look for a potential uptrend, or potential long trades, so to speak. Obviously, this is very, very simplified, and you can add more conditions to the equation here, but overall this is what a market structure break would look like for me. What about my second potential trade I like to focus on? Basically, we can use our drawing from here. Basically, we have the same situation again. Let's assume you are in a downtrend and you reach a higher time frame level. Let's just simply mark that in pink. Yeah, a higher time frame level. That is crucial. If we now went below this higher time frame level and zooming into this area, so basically let's assume we wanted to zoom in here. Yes, and now what needs to happen inside of this area on the lower time frames? Yes, that is what I would ask myself if I want to, on the lower time frames, if I want to trade a deviation. I am in an area of interest, however, on the higher time frames, there hasn't occurred a trend shift yet. So the question is, can I enter a trade in this area even so there hasn't been any trend shift yet? What I would want to see for that is basically price entering this area and then changing the trend inside of this area on the lower time frames. Now I would be able to buy a pullback here on the lower time frames, which let's assume could in an ideal world be this area. And then I could really enter at the start of a move. However, let's also be clear, you never really know whether this is the move you are looking for, right? So that just for the moment. This is how I personally like to frame my trades, basically trying to focus on not too many different setups, but really only try to become an expert in two different setups for myself, and that way limiting potentials to screw it up, so to speak. Honestly, I don't really know what went wrong. Unfortunately, I can't see the chat. So if there is someone in the chat, just keep writing. I'll try and fix it later on. And then I can try and respond to whatever questions you may have. So we have already nailed basically two things that come to mind when I think about this quote. It's hard to build momentum if you're dividing your attention. If you want to build momentum, do the following. Don't trade too many different assets. Only try and focus on one or two setups. They are enough to make a whole career in trading. At least this is what I believe. And then obviously I have just shown you what my basic setups look like. Don't have too many variables. I believe the simpler the better. because the more variables you have, the harder it's gonna be for you to really execute on these setups and to be sure that this is really what you want to trade. For me, it's trend. Once broken, pullback, then looking for confluence with respect, for example, to levels or fair value gaps. And maybe ask myself, have we taken liquidity? What do momentum indicators say? That's it. That's 5 things. I can easily write them down on a piece of paper, illustrate them with a pen, and I don't really want to have more in my system. Finally, I also believe to be able to trade momentum, you need to repeat what you want to do, what you want to trade over and over again. And for that, you want to have a routine that you can keep up, a routine that does work with your everyday life. So ask yourself not what is the perfect trading routine, but rather what is a routine that I can fit into my everyday life. What does my everyday life allow me to do over and over again? And then become an expert in this. And that way build trading momentum and be able to turn a small sum of money into a big sum of money, basically. Do you, just like myself, like trading quotes, live quotes? Let me know about them. Share with the community. What are your thoughts? Overall, I would say if you want to become an expert in one thing, or try to become an expert in one thing, is better than being informed in many things, at least with respect to trading. Obviously, I don't try to tell you don't know anything about what's going on in the world, but hey, that is a different topic. So hopefully you like these little excursions, little thoughts of mine at the beginning of our live streams. But for the moment, I would say let's really jump into the charts. And jumping into the charts then basically means let's look at the SPY, SPX, S&P 500, and obviously also at the NQ. The quote I was just mentioning basically means go back to basics. And that above all obviously means zoom out. I don't know how many of you have watched my recent video where I claimed that the lows on the S&P 500 definitely are in. Reason being, if you look at the monthly chart, whenever you break the monthly downtrend on a closing basis on the monthly chart, you are looking at longer periods, longer uptrends. For more, just simply check out the link in the description. I will also link to it later on here in the video, but the data I was looking at goes back to 1998 and it had a 100% hit rate. When we're looking at the SPX, and that is crucial for our analysis today and obviously also over the course of the next few weeks, when we're looking at the SPX here on the weekly chart at the moment, the big question we then want to ask ourselves obviously is, have we already seen the pullback that, what I called it, will turn into a massive long-term opportunity, or are we still getting this opportunity? How can you get a better feeling for that? Well, I was basically looking at past occasions, and we are basically looking at different time ranges in a very generalized way. We can say that these periods last between 150 days or 220 to 250 days. And now have a closer look at what we've done so far. From our low, 10th of October was the start of the week. I think the low occurred a couple of days later, but from our low in October until the break of the monthly level trend, and then pulling back violently, quickly into this area here of around $3,850. It took us 150 days. So basically what I'm trying to say is there are two options for us. Either the pullback is done and we will not see lower prices than $3,850 again, which personally I'm not too convinced about. I've mentioned it before. There is a lot of liquidity resting underneath these lows that hasn't been taken out yet. And we have a monthly target box, a weekly target box. We could now bring it up a little bit as 1 week has passed again at around $3,810 starting there. Secondly, what about we go for the longer window of time? Let's say it really took us again like 250 days. Then we are looking at June 2023 when you will see this price be tagged again. So basically, we don't know obviously, but chances are we are not done yet. There is a grind down gonna come, and this grind down may turn into a massive buying opportunity for all of us. Then guys, let's really jump into the charts. Look at the typical analysis, top down as always. If we look at the S&P 500, we want to start on the highest possible time frame that I'm at least concerned with, and I guess most traders are in this with me, the monthly. What can we see here on the monthly chart? Obviously not too much has changed, but let's recap very quickly. Obviously we are very bullish on the monthly chart. We've just broken the long-term monthly downtrend. However, we are also entering an area of high resistance, monthly liquidity resting above us at around 4,215 and again $4,325. We identified that there are different target boxes on the monthly time frame as well. In this case, bearish target boxes, so areas where you would rather want to prepare yourself for selling. On the contrary, if you're asking yourself where could you buy, the first, so to speak, pullback zone, the first bullish target box on the monthly starts roughly at around $4,034. And then obviously, should we make it as far down as around $3,800, take out all of that liquidity, then that would potentially be a massive opportunity. So overall, we are bullish. However, at the same time, with everything I've just told you and with everything you can learn in my video, why I believe the lows are in on the S&P 500, you are looking at a pullback to come. The question mainly is, when is this pullback going to come and how deep is it going to go? With that being said, let's move down to the weekly time frame. And for the moment, get rid of our monthly boxes and levels and start basically from scratch, not to clutter our chart. If we throw on our weekly levels, we see that interestingly enough, the bigger, longer term weekly downtrend still hasn't been broken yet. The only thing that really still makes me cautious, I'm asking myself, are we going to see a, in inverted commas, fake out on the monthly, and the weekly is dictating what's really going to happen here on this chart. Otherwise, basically the same level where we find a lot of liquidity. Interesting, I would say, for the next 1 or 2 weeks should be the level of around $4,100, as we have a lot of liquidity sitting there as well. And if we add on our boxes on the weekly time frame, we realize that there is still a fair value gap inside of this bigger weekly bearish target box that we haven't interacted yet with. And this is why I'm still sticking to my guns. This is why, as I've shown you last week, I still have my sell order sitting at around $4,230. Because I believe we've come so close. There's so much liquidity resting here. People may think, that's been it, we're gonna go down, and then you have this one final push up. Obviously, this is just a feeling. You can't trade feelings, but you need to have an idea. You need to have a bias at the back of your head so you are able to react should it happen. But obviously you need to have an idea for both sides when trading. What you could also, of course, also do is you could add your momentum indicators, and even on the weekly chart you see that we are extended. We are in the overbought area, the blue one being the stock RSI and the orange line representing the stochastic. Yes, I know this alone is not an indication for anything. However, look at all the areas or all the times that in an overall downtrend, or rather bearish environment, bear market, you've been in these overbought areas here in the middle of February. What happens? You get a pullback. First of all, doesn't mean that you're going to crash to new lows, but pullbacks are very likely. Same here in August. Yeah, basically marking out a high that's going to come. One more push and then you go down. Yeah? Or if you go back to November 21, it basically also signaled that the top wasn't too far away. Basically what I'm trying to say here is, even if we push further up, you have to ask yourself how much further can you push up before you're going to see a pullback. In other words, yes, I'm very bullish on the higher time frames. I believe the lows are in. However, is this the area where you want to buy now for the longer term? Probably not. You're entering or you already have entered areas of heavy resistance. Right then, let's zoom into the daily chart and have a closer look at this area. We've mentioned it before, of around $4,100. As you can see, there is a weekly fair value gap, something that I am quite interested in with respect to trading setups. So zooming into the daily chart, again for the moment, getting rid of our weekly levels and boxes. What can we see? We are still in a daily uptrend. However, the more you zoom in, the more likely it seems to become that our at least local top could be in. One thing that personally I find very, very interesting is what typically happens after trend shifts on the daily time frame. But before we come to that, let's just stick to our routine and look at what we can see here. Overall, this is still a clear uptrend on the daily chart, bigger picture. Look at that. Bigger picture, all the lows are holding at the moment. However, we haven't made a new high here on a closing basis. Nonetheless, I would say you want to break around $3,900 on a closing basis to really say, okay, the daily trend on the for the longer term has been broken. Aggressively, I would look at this area of around 4,117 on a closing basis, which is very important to note, because this means you can spike it for liquidity and then still continue up, which happens often. Nonetheless, I was mentioning something that I find particularly interesting, and that is that we are looking at least a trend shift. Let me illustrate what I mean. We've broken a daily low here, and what happens in many cases, let me maybe change the color to show you a bit better. What is the typical sequence of things following a trend shift? You get one more push and then the bigger pullback. Let me illustrate that on other examples. Same here. Daily trend obviously still intact. We make a new high here. This is the low that we want to really look at. But we get a trend shift. What happens after the trend shift? One more push up before the real pullback comes. So one more push up before the real pullback comes, question mark. That is what I'm asking myself at the moment. And you can do that over and over again. Yeah. Trend shift, trend not broken. You get one more push up, pullback, and again, actually, trend shift, and in this case, actually trend break, because this is the new high, so this becomes the crucial swing point. Here you have the trend break, and even then, all of the stops over here above 4,113 taken before you get the real leg down. So push where to? On Thursday, when we were opening with a opening gap. So basically, I could really see us go for this level of $4,172 again. Will we go a lot higher, as I was hoping to 4,230 in the longer term? I think so, yes. But on the daily, there are signs that show us that potentially not at the moment. So then the question becomes, is there another possibility of how to determine where we could potentially go to, besides just throwing on our levels and boxes? I've marked them out here. We have tapped this first bullish daily target box that starts at around 4,138. There is liquidity resting at around 4,100 and a daily fair value gap. Then obviously really interesting target boxes and levels would be around 4,000, and if we where did I anchor that from? This low. If we take this swing point, which is quite pronounced, so I would give it quite some importance. The area of around 4050 also seems to be interesting for a bigger pullback where you would want to potentially buy. However, I was mentioning that I try to focus on two main setups: market structure breaks slash shifts for the shorter term, and deviations. Now, deviations, as we all know, can be very subjective. There are many highs that you can potentially address. And this is then where I also like to make use of indicators. The two indicators that I really look to at with respect to trading deviations is the Bollinger Band squeeze. You can see it here with the darker gray shaded area, and also a volatility indicator that you see here. Now, what do I do? If I would just quickly like to illustrate to you the power of these deviations. Just know that when you see a blue shaded area on the indicator, then you can assume that volatility is very low. So what can we expect? An expansion. What I'm always interested then is the last swing point above me and below me on the chart, because they tend to be crucial in these situations. Let me illustrate that on the chart for you. You have here this swing point of around 4050. You can do the same thing. What would be a swing point you would want to denominate on the lows? Maybe this level, or also the level here of around 3915. And already here you can see how crucial these levels tend to be. Yeah, you get the deviation, and this is where the magic for me happens. Once you are in this area, once you have a daily close above such an area that I call myself a squeeze range, you want to go to the lower time frames and look for a market structure shift, right? You can play the same game over and over again. Let's quickly go through it. For example, here, this would obviously be our swing point, hasn't been interacted with yet. However, remember, we've said it time and time again over the course of the last few weeks, the level of around 3,800 basically is kind of like the last stand on the daily time frame. You don't want to break it on a closing basis. So should we come down there, how interesting that it falls together with exactly this indication here. This low basically becomes the high of the next squeeze or volatility range shown here. Even if you look at the squeeze range, look at what we run. We run all the stops above here. Unfortunately, no close, which I have as a set rule. I want to see closes, and then you go down. Next possibility here at the end of January, what would the potential low be? Either the level of around 3,900, or you could potentially also go for the level of 3,960. Again, what do you get here? Deviation below. Can you identify a market structure break on the lower time frames here? Then you would want to try and play this move up. Here the question becomes, are we looking at the level that I'm constantly talking about, or is this the level of interest at around 4,190? To the downside, well, we've talked about it, potentially This area again, here it's a bit sloppy, not too nice the level, but one more time, 4080. Here we have another squeeze range, same level to the downside, 3850, a level that I would want to be aware of. And if you now, and this is why we're doing this exercise, obviously, look at this last squeeze volatility range that is building up here. What are the levels that you're looking at? You are, for once, looking at the level of around $4,096. And obviously, at this level of around $4,170. Let's maybe change the color here. So we know that this is the range that we are currently working, and the range that with respect to deviations is of high interest for myself. Throwing back on the daily levels and boxes, what do we see? Yeah. Either we've already seen it and we're just not going to go for the liquidity sitting here. Well, then the question becomes, how can you enter? What I would want to see, what I'm basically hoping for, let's quickly jump down into the lower time frames. I would love to see price go up here on the 1 hour time frame. We have already broken the 1 hour trend here after tapping into this daily target box. So what I would want to see is for price to move back up here and then form some kind of trend change on the 1 hour time frame or within this opening gap that we've identified on the daily. And if I get that, this then will be another chance for me to sell, even if we can't make it up into that box. Same obviously goes for the downside. Let's break the level of around 4,100, move back above it, and then I could still see us push up afterwards. Who says that can't be the path that price is taking here? Right, for the moment, let me get rid of all these lines here to not distract us too much. There's enough on the charts already anyways. And let's then throw on our higher time frame levels one more time, and then it becomes crystal clear, at least to me, even so I don't have a crystal ball. We are right smack within resistance. I don't want to buy for the longer term here. If at all, I would consider a short-term trade within this area, and I would want to take profits very quickly. On the other hand, there are a lot of bullish target boxes. There is a potential range with a weekly fair value gap sitting right beneath us that could be tapped for liquidity. And here I would much rather want to long for this one push up or next push up than where we are sitting at the moment. Right, guys, let me very quickly have a look at the chats. Just give me a moment. Sitting right beneath us that could be Still struggling here with the comments, unfortunately. Sorry for that. If I can't fix it at the moment, just still leave your questions, leave your comments, and I'm happy to respond to whatever you were asking later on. Anyways, if you've gained anything from my stream so far, if you're gaining value from my channel overall, then support me by subscribing or sharing. Share what you've learned so far with other people. Share my channel. And with that being said, no more self-promotion. Let's rather move on to the next chart that I would say. Let's start on the higher time frames. And let me throw on my levels for the moment. On the monthly, we can see that NASDAQ hasn't yet pushed up into this monthly bearish target box. There is a lot of liquidity sitting at around 13,743 and above. I've mentioned that last week, and I would still love to see NASDAQ push up into this area, or maybe a bit further down, as you'll see in a bit on the weekly chart, and then pull back. What is our closest bullish target box on the monthly? Because obviously we always want to especially focus on bullish pullback zones if we are in a strong uptrend. And as you can see here, starts at around $12,521. There's not really a lot to say about the monthly besides that I would really make sure I have this level of around 12,520 on my chart, and also an alert set, so you are notified should price get there, because that obviously could be of interest. Moving down to the weekly time frame and looking at our levels, we see that it's not exactly the same, but obviously markets are correlated, and a lot of what we've just talked about and described on the SPX obviously also holds true for the weekly chart. On the weekly, very, very interesting is this level. Look at the price of around $12,915. What do you see? I'd love for you to comment in the chat. I'd love for you to tell me what you see, and then I could respond immediately. Well, what you see is a weekly fair value gap, and you see liquidity resting underneath these weekly lows. And this is really where I would want us to go for a long trade, grab that liquidity, and then potentially push up again to then maybe go for the liquidity sitting resting above 13,350. Down here, up here, potentially. If we zoom into the daily to get a better picture, clearer or more context, we see a repetition of what we talked about early on. We are not looking at a trend shift yet, because for the daily trend to really break, we would have to break $12,730 on a closing basis. This is the last crucial higher low that we formed on the NASDAQ before pushing up to a new high. However, we are looking at a trend shift. We have, at least in the nearer term, broken the daily trend here. And just as we've described on the SPX, S&P 500, what happens next? You push up one more time, and then you potentially start a bigger downtrend. Just what I described as a potential idea for the SPX is what we see here now, or are already looking at playing out on the NASDAQ. And to give this more validity, let me repeat the exercise from earlier on. What did we say? We have a low volatility range forming here. This would then potentially be the area that you want to be interested in with respect to deviations. And on the lower end, look at that. Daily liquidity sitting underneath here. So I could see us push down here and then maybe go either for one more push up or really confirm on a closing basis a break of the daily trend. Now you tell me, yeah, well, what is that gonna help me? You are basically telling me I could see us go here and then up there, or we continue further down. Yes, it's true, but this is what trading is like. Technical analysis can give you potential areas of interest, and then you need to know how to react in these situations. Let me explain what would I do if we push down here and we close on a daily closing basis underneath $12,730. Then I would nonetheless maybe expect us to take out this liquidity, deviate underneath our vola range, so to speak. But nonetheless, I would expect one more push up into what? Then a potential bearish target box sitting at around $13,000, and then continue the downtrend. So you're not going to miss the move if you go down here and you realize, oh, damn it, we changed the daily trend and I could have hopped in here at the top. Yes, you could have after this trend shift. Why did I wait? Well, the push up is going to come, and then you enter with a confirmed daily trend break, entering around here on the lower time frame, on then another market structure break on the lower time frames is a lot safer and potentially more rewarding than entering here where you have no confirmation yet. And why all of this exercise? Well, because it lines up so nicely with the different target boxes we find on the daily time frame, on the NASDAQ, and also with fair value gap areas. Should we get that push underneath this volatility range here, we would enter an area where price moved up very quickly, thus creating a daily fair value gap. And secondly, you're entering the area of a daily target box. To sum up the NASDAQ, let me again here on the daily chart throw on all the important levels that we have. And what do we see? Overall, this is still a healthy uptrend. However, we seem to be forming something like a potentially distribution range, which leads me to believe that we're either going to deviate before we see further downside, or we deviate at least below these lows at around 12,915 or even below 12,620 before then starting the bigger pullback, which goes back to the idea that we talked about on stream last week. It basically remains unchanged. I'm still hoping for that deviation or this deviation, and I would love to become a buyer down here inside of a monthly target box, a weekly target box, a daily target box with a weekly and daily fair value gap, liquidity resting underneath this low. So many confluence factors that would make me want to buy, adding in momentum. You see, if you enter such an area and you have low momentum, in many cases this signals a good buying opportunity. You see it over here, you see it over here, you see it over here. And one more time, I would like to stress and repeat, these indicators alone don't mean anything. However, there's nothing wrong with using them as a piece of final confluence for you to have more conviction into your trade setups. Now, finally, I would quickly like to leave the charts and see what one more indicator that you want to keep in mind might tell us about the time to come, the weeks to come. And this is the Fear and Greed index. Overall, if you look at the Fear and Greed index, come on, you can see that we are in the area of greed. We are at 65 again. This is not the moment when you want to consider to buy for the longer term or even just for the midterm. If you look at the timeline of the Fear and Greed index, look at what happens whenever you are in extreme greed. Beginning of September, and by the way, even the Fear and Greed index, I tried it out. You do the research for yourself, give it a try. Can be read just like any chart. Let me show you. We are in extreme greed here. We get a trend shift on the 9th of December. Next push up into the area of greed, 15th of December. What happens on the 15th of December? Let's see. On the daily chart, obviously, was about to screw up whatever I'm about here on the daily chart. Sorry. Now, what happens on the 15th of December on the daily chart? On the NASDAQ, you get this huge push down. Yeah. Let's give it one more try. In January again, we push into this area of extreme greed. We get our trend shift or break even on the 9th of February. Wait for the next push up. 15th of February. What are you looking at 15th of February? This downtrend. So where are we at the moment? There are two ways of looking at it. Again, as always, obviously, either we have just witnessed the trend break on the Fear and Greed index, then whichever push up comes now might be a good selling opportunity, or we repeat what we've seen here. We push up into extreme greed one more time, and then you want to sell the next rally to come. Right. For the moment, I guess let's leave it at that. Let me see if I can figure out one more time how to see whether anyone has commented. No. Then final words. Going back to our presentation here. What I would like to leave you with is this, some simple keys that I like to follow that can help you to be a lot more successful in your trades than you might have been in the past. Guys, follow a top-down approach. This was so helpful for myself. I really try and stick to the trends. However, there are different trends. There are long-term, mid-term, or short-term trends, and if you try to categorize your trades into these long, mid, or short-term trades, then you can take multiple trades, focusing on not too many assets. 3 to 4, I think, is a max you should try to focus on. And always remember that emotions govern most of us traders. I've been guilty of that before, and I will be guilty of it again. However, there are indications that may give us a hint what is going to happen next. And I think the most important point for any trader is trust your system, rinse and repeat. Yes, you can learn from other people. Yes, you can talk and share with other people, but in the end, you need to trade your system. You need to know your rules, rinse and repeat. With all of that, guys, I would like to leave you for tonight. I'd like to say thank you very much, obviously, for watching. If you've learned something, guys, share, support. Happy for your attention, happy for you watching. If I can help you somehow, send me an email. Thanks, take care, and hopefully talk to you again next week. Bye-bye.